I think what you're trying to get at is disruption and just the pace of disruption which is hitting every industry, and I think that's absolutely right. But there is no other way to fight this. Every company needs to innovate. Every company needs to focus on technology. Every company needs to use technology to stay relevant. This is just the way the dynamics are. And management teams who recognize that, management teams who recognize that they need to be ahead of the curve versus their competition in finding something different for their customers, to delight them, to make them happy, will, I think, stay relevant over a period of time. And so, those are the kind of companies that we are focused on. Those are the management teams that we are focused on. But I think the point that you make is very valid from, the perspective of, the way we value mining companies or energy companies is we value them as if they're melting ice cubes, because they are melting ice cubes in the sense that they're, taking resources of the ground, out of the ground. And the cash flows you get today is because the mine is getting depleted over a period of time and will not exist in 10 years time. So you give Rios a 8 or 10 times PE because that's kind of the life of their mines is the estimate of the markets. Few years back, when we used to look at healthcare companies, we used to give them a huge amount of PEs because they were investing in R&D, new drugs were coming up and things like that. And then the market very quickly realized that these were also actually melting ice cubes. Because as long as the patents were valid on these new drugs, they made excess free cash flows. But the minute the patents went off, those free cash flows went away. So they were also in this resource replacement treadmill, which the mining companies are, and valued at 9 times. And very quickly the drug companies came back from 35 times to 15 times. So the point of this long story is, you look at technology today, most of the technology companies that we look to invest in are very highly valued. But actually, if you look at the speed of the treadmill is the fastest in that sector. So to make a view that Amazon or Facebook or Apple will still be relevant in 15 years' time is a very huge leap of faith. Yet we are willing to pay 30, 40 times earnings for them. You go back a few years, AOL used to be one of the largest companies in the world in the 2000 time period. 50% of the US consumer base used to be on the dial-up internet of AOL, and this was the company that was going to take over the world. Yahoo was the next company that was going to take over the world, and they don't exist in their current form today. So the treadmill of technology is one of the fastest, yet the valuations are also one of the highest. And that dichotomy is, I think, very, very interesting in markets today.